The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 6th, wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that, let's always remember that what's talked about is a dream. What's envisioned is darn right exciting. Of course, what's planned becomes possible. What's scheduled, though, that's real. And I want to really thank you for scheduling your time with me here this morning. I'm absolutely here to serve you. So feel free to call on in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So how about a random act of kindness? That is the way to kickstart your day on this wonderful Wednesday. This is Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off 114 points, trading at 17,814. S&P down 10, trading at 2,078. Composite off 29 points. That's trading at 49.09. Russell 2000 is flat right now, down 38 cents, trading at 12.15. The DAX is off 85 points. The FTSE's down 11. Gold is flat, trading at 11.93. Silver's off 17 pennies. She's trading at 16.38. Light sweet crude up $1.53 this morning. Leading the charge, the upside of something that is not in a buyout merger acquisition mode would be Priceline. Priceline is up $9, trading at $12.72. Puma Biotech up 4.5%, up $8. Regeneron Pharmaceuticals up about $7. You've got Ultragenyx Pharmaceuticals up 10%. Herbalife up 15%. BioMarin Pharmaceuticals, so the farmers to the upside, up $5 as we speak. To the downside, you've got Fossil Group. That's off about $8. That's down nearly 9% this morning. You've got TriNet Group. That's down 16%. That's off $5.50. Netflix off $5.50. Baidu's down about $5.70. Google's off about $5.50. A lot of $5.50-ish type stocks to the downside. Let's go check in on the ETF structures. Let's start off with the diamonds out here. Diamonds are back $1.20 right now, 1.9 million shares. This is the daily chart for the diamond. So let's go see what it is doing. We can see that it's right now trading below, has broken below its market profile support level. That would be at a price point of 178.61. We know that we've got a swing point out here that the diamonds are trying to get into. Let's go put the blue line across our screen out here. Let me do this. Let me get my tools all set up here so I can turn some things on and off. Makes it a little bit easier for you to look at charts with me. Let's turn off the TAS boxes. So if we look at the swing point inside the Dow Diamonds, that's going to be the trading day for March 26th. Now that swing point has got 6.6 million shares. We know that swing point was tested with 8.6 million shares on April 17th. Said, hey, at some point in time, I want to get back down there and test you. We have not seen price get down there yet, to at least to the top of that swing. The closest we have seen was April 30th, and that had 8.5 million shares, but still moving with volume versus 6.6, said they wanted to get down there. Maybe today is the day. So far, volume, 2 million shares in only 41 minutes of trading. So you've got volume picking up to the downside. That says what's key to be watching inside of the DIA ETF for the Dow is going to be the area from 175.46 to 177.30. That level has not been tested yet, but if volume were to keep up at this pace, you would be coming in there with volume. That's what's going on inside of the Dow Diamonds. Won't really know what took place until 4 o'clock today. Let's go take a look at the QQQ ETF, down with 86 cents out here. If we take a look at it, what is it trading into? Well, if we look at its swing point, a similar swing point, which would be March 26th, we're well away from that area. The top of that is 105.70. The volume on that swing inside of the QQQs is 47.8 million shares. So far today, 9.2. Yesterday's move down, 47 million shares. So 47 million shares kind of trying to move into 47 million shares. Not a ton of volume inside of the QQQ ETF yesterday. In fact, quite a bit, considering that let's see here, what did it get? Well, let's go take a look at what it is testing right now, which is at least the April 17th level. And that's got 46. So a lot of 46 million share type days out there. If you can get a close inside or beneath 106.95, that 105.70 level should be tested inside of the QQQ ETF. If we go take a look at the IWM, the Russell 2000, this has been the weaker of the indices. That's into the March 10th, so it's not March 26th that we're looking at for its swing point. Instead, we're looking at March 10th. This level here has been tested now 3 times. It's been tested with more volume each time. But for some reason, price has been unable to even test the bottom of that swing point, March the 10th. Why is that? Well, the reason why is if we go over and we actually take a look at the indice out here. Let me see here. I think it's right over here. Give me a moment. We looked at this the last hour. It's because let's see if it was on this chart here. Russell 2000. It's because the index is coming back and actually just testing the top of a longer-term consolidation box. So if we pull this back on my screen out here, what the Russell 2000 had been doing, with the exception of one time that it broke out of its, well, let me restate it. Back in November of 2013, we're now in May of 2015. Long-term consolidation. The Russell 2000, in essence, has consolidated in price between the level of 1079 and 1212 out there. The top of the consolidation really beginning back here on the trading day of March 4th, 2014. We've only seen to the downside one break, and that was during the Ebola scare out here. That Ebola scare turned out to be what? A false break to the downside. What did price do? Got back and tested the upside, tried to break out of the consolidation towards the end of December. Couldn't do it, came back down inside just simply to rest a bit, and then finally did break out with conviction, and this is back on March the 12th. I say that because it's a little bit of an island bottom formation out here. We take a look at it. I'm going between the days of March 9th and March 10th. We saw a gap down, that low out there, 1218.76. The high on the very next trading day, 1213. The very next trading session, March 11th, we saw price just really kind of move sideways. However, that is not the case on March the 12th. What we saw out there was we saw a gap up. That created this little island bottom out here. Very strong, very bullish pattern. Of course, what you and I both know is there's nothing more bearish than a failed bullish pattern. This pattern does not fail until you see a close below the low of March 10th. That price point is 1206.32. But this is perhaps the reason why we are seeing a significant level of support at this 1282 area. I do believe it's from the Russell 2000. That's one of the spots where you and I are really going to get a real piece of information with regard to what this market wants to do. Is the so-called unfavorable seasonal selling cycle, is it really getting in gear right now, which it could be? You may recall for weeks I was calling for a top to come in on May 4th. Well, that so far has come to fruition. But the reality was the real final move down shouldn't take place for a couple of weeks. However, forget about that schedule. What we want to pay attention to is really what's going on inside the Russell 2000. At this stage right now, all that we know about it is prices come back to a significant level of support, and that is 1212.82. The other spot we want to be watching again is going to be 1206.32. That's the low from the trading day of March the 10th. That's what's going on there. Let's go back over and take a look at the ETF structures. Let's go take a look at the SPYs out here. The SPY, what did it do yesterday? Well, if we take a look at the SPY ETF, yesterday was down with what? 113 million shares. That 113 million shares going into 191 million shares. Don't think so. It is coming. Yeah, it had some accelerating volume yesterday. But let's take a look at what it's actually traveling into out here. Lighter. It's coming into that candle session with lighter volume. Hey, today is it going to ramp up? It's still trading below the high of that day, 209.23. You're trading at 208.11 at this stage. Says you can go test the bottom. Volume so far, 26 million shares in 45 minutes of trading. Look, you don't have to be a math genius to figure out that take 26 times 6. You got about 180 million shares. It's still even light. It's still light compared to that April 17th downdraft day out here. So what it looks like, and the volume will not, well, I can't tell you whether volume will continue this pace or not. It is not normal that volume will continue this pace. Volume typically coming out of the moving into the market during the first 30 minutes of trading and then during the last 30 minutes or so of trading. That's why if you just use the straight line, that's why I like to be able to use it right now, just simply some straight line math out here, because if you can't beat it on the opening session, in essence, or the opening hour. Of course, it's only the opening 50 minutes as we speak right now. What makes us think that it's really going to be able to bust through that area with volume? Anything can happen, but here's what we know so far. Yesterday, moving into that area with light volume, it still closed inside there. It still closed inside that swing point. That said, hey, I may want to go test the low out there, and that's what you're looking for. Now, if it can test the low of 207.01, that says it really ought to be able to get back and test the March 26 swing point. That March 26 swing point, 153 million versus yesterday's 113. Well away from that area. The first area that it's got to get through is going to be the 207.01. But nonetheless, any close today inside of 209.23 says that it wants to go test 207.01 to 206.37. That is the message of the SPY. So we took a look at all three of those ETF structures out there. Again, the key today is going to be, one of the keys is going to be the Russell 2000. Let's go take a look at a secondary key out here. A secondary key, in my opinion, is going to be the New York Stock Exchange. Let's assume that the market here just simply continues to trade horribly all day. If we take a look at the New York Stock Exchange, we can see that its price oscillator, if we were to end right now, getting very close to a level of where the market should bounce. It has in the past. Why should it not do it in the future? This is Steve Rhodes with TFNN. Let's go investigate that just a tad further when we get back from this break. Right now, we got the Dow off about 105 points. S&P, I'm not sure where it's at, but we'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 111, S&P's down 8, Composites up 21, Russell 2000 still flat out here. So before we went to that break, we were taking a look at the New York Stock Exchange, really the best index out here to give us a better feel for what's really going on inside the market. So we're going to put that chart back up on our screen right now. And as I mentioned this really in a call yesterday when we were talking about the markets. And so there's nothing that has changed here. And that is that when the New York Stock Exchange, now as I take a look at the very bottom portion of the chart. In fact, let me do this here. I'm going to make it even easier for you. Let me do this. We're going to take this. I'm going to try to do this. Let's see if I can. Nope, that didn't work. I guess I have to do it this way. Give me a moment here because I'm going to make it nice and big, and that way it's really easy. I'm going to try to do that, make it real easy for you to view with me. There we go. Okay, that's how you do it. Oh, I know another way I could have done it. All right, next time I'll use the other way. Okay, so, well, I'm going to do this. Let me see here. Can I? Actually, this is the way I've got to do it. Okay, enough of that. Sorry about that. So my mind is thinking. I'm talking to myself out there. I don't know what that means. I don't know if that's good or bad. I think that's good. In any event, let's take a look at the New York Stock Exchange. What I want you to really focus on is, quite frankly, the bottom portion of the chart out here. That's one where you see a yellow dashed line at the upper portion that says 150 on it. The very bottom says minus 200. Don't worry about the 150 as we speak right now. That's really not the level that we're taking a look at. When the New York Stock Exchange, when the price oscillator gets down to that level, that's an indication of the New York Stock Exchange being oversold. It's actually the best indicator that I've been able to identify with inside the New York Stock Exchange of an oversold marketplace. The 150, that level, sometimes I don't want to talk about the 150 because that's got some different meanings as well. Let's take a look at right now this minus 200 level. Our reading as we speak right now, right here at 10:26 a.m. is minus 194. Folks, I use this as a guideline, so it doesn't have to hit exactly minus 200. It could be minus 205 or minus 195. The key is, though, where does the market close? Because this price oscillator could change substantially by 4 o'clock. Let's go with the theory. Let's go with the theory that the market actually gets worse during the day, and we see the oscillator reading get down even further, down around the, whether it's minus 195, minus 200, whatever it might be. If you come back and you take a look at other lows inside the New York Stock Exchange, whether they're short-term, whether they're significant lows out here, let's just take a look at the previous one from back here in March, okay? And remember, you go through the same mental gyrations, with if you're on the selling side, if you're on the short side of the market, you see the market's moving, in a big way as it moves down to that area, and you feel like you're on the right side of the trade, and then you start to ignore all the signs that are really right in front of us. It's never a good move to do that. It's always good to just simply check our biases at the door. In fact, let me give you a perspective such as this. If we take a look at that, you can see that formed a nice low out here. This is back in March. In fact, if I pull this back just a bit, I think what we're going to find harmonically, the move from the top down to that oversold bottom, so February 25th down to there. Let me see if I can do this with this little box. Let me see. I'm going to try to draw a little bit of a box. Okay, there's the actual price move. Let's go compare that to the price move that we've got in place. So now I'm assuming that I can carry. Oh, shoot, that didn't work. Let me see if I do it this way. That didn't work. No, that didn't work. I know there's a way for me to grab this. There we go. Take a look at, here's, in essence, if you go back to that low that was formed when the price oscillator get down there to where we're at now, this actually is communicating a fairly important message to both you and I, because New York Stock Exchange is a much wider swath of the market. It's much better than taking a look at the Dow. It's much better than taking a look at 500 stocks out there, the S&P 500. And this go-round right now, it's not even half that harmonic move to the downside. That's going back into March, and we're getting towards an oversold level. So if you're a bull, quite frankly, what you want to see, whoops, I don't know what I did just there, but what you want to see is you actually want to see the market move lower today. You want to see the New York Stock Exchange move lower today. And the reason is because that could set up a nice little buyable bottom out here. It has in the past. Now, look, let's go back a little bit further inside of the market. Let's come back into the time frame down here. You may remember this back in the early part of December 2014. We saw the price oscillator reading get down to minus 199 on December the 14 out there. It moved a tad lower back here on December 15th. It moved a tad lower here. Actually got down to the real low reading was on the following day, December 15th, down at 257. That marked a nice little buyable bottom. Of course, when you got that little bullish reversal signal out here on December 17th. That was something to pay attention to. How about back in October 2015 out there? How about that lows? When we come back, we'll go take a look at it as well. This is Steve Rhodes with TFNN. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, we've got the Dow is off 102. 111, I apologize. The S&P is off 7. The composite's off 20. The Russell 2000 is up just slightly, up a quarter. The Euro-Japanese yen is on a tear out here, and that's why we really want to be paying attention to what's going on. We take a look at, well, at least I think we want to pay attention to what's going on inside the summation index out here. So we'll go back one more time here, take a look at the New York Stock Exchange. I was mentioning the bottom that came in back in October out here, and I'm going to switch over and show you what that was showing, as it was also down in that minus 200-ish type range. Now, the New York Stock Exchange, the first time that the price oscillator got down to its lowest low during that time period was back on September 25th, and price continued moving lower, quite a bit lower, as a matter of fact, out here during that Ebola scare. Now, it was moving higher, but the price oscillator was actually making a rising bottoms pattern out there. And that's why you were waiting for some type of bullish reversal signal, which came in the market. It really came in the S&P 500. We had a nice little bullish hammer candle on October the 16th out there. But when the price oscillator is making higher lows and prices moving lower, that also says you've got to be on guard. Now, we do not have that going on inside the New York Stock Exchange right now. Instead, what we just simply have going on inside the New York Stock Exchange is weakness or oversold. We're getting towards levels of a potential oversold bounce out here, and we've done less price damage than we did the last time in 2015 back in March, when we saw the price oscillator get down to this level and then form a nice little bottom out there. In fact, drove prices all the way into the end of April 27th, when we saw that high out there. So we need to pay attention. I suggest that we pay attention to that. I know I will. You're on your own. Let's take a look at the NASDAQ composite. Remember, we're just showing you that pattern out here inside the New York Stock Exchange. And look, it's only 10:36. There's a lot of time left in the trading session, so I do not know how the day is going to end up. If it were to close right here, what I would be saying to you is, this is interesting. The NASDAQ composite price oscillator is it's just slightly, as we speak right now. So we'll see how the end of the day, but it's just slightly making a higher low than the reading that we saw inside it a few days ago, back on April the 30th. And we see a little bit of a, whoops, what the heck's going on with my little cursor there? And we're also seeing right now a lower low in price that was formed inside the NASDAQ composite. So as we speak right now, we're seeing a bit of divergence. But again, this oscillator reading doesn't do us a hill of beans until the end of the trading day. We already know we've got a lower low. the question is with regard to price. The question is inside the composite, are we going to get a higher low? Now, it's oversold reading. Unlike the New York Stock Exchange, it's not down around the minus 200 level. It's down, I'd like to say, a real good reading is down around minus 67. So even if we don't end up with divergence at the end of the day, we're only at minus 47 as we speak right now. If that gets down, we have a bad day and we get down to minus 67 or so. We've got to be on guard out there for at least a bounce, at least a relief rally or some type of bottom out here. So we want to be paying attention to that. Okay, what else do we want to pay attention to? Well, how about the divergence of this that's going on inside the market? And that divergence is inside the Euro-Japanese yen. The upper portion of my screen out here is that currency pair, the Euro-Japanese yen. The center portion is the S&P 500 futures contract. The bottom portion is the NASDAQ futures contract. And the reality is when this currency pair is traveling in the opposite direction of what the markets are doing, who wins the battle is the currency pair. You can't use it from a timing standpoint. That's why I just spent so much time with you as I did when we took a look at what's going on inside the price oscillators out here, because we've got to look for some other tools. But when this currency pair is moving higher, such as it is right now, and the markets are moving lower, such as they are right now, they say that you have to be on guard. You have to be careful out there for something. Whether it's a counter trend rally, whether it's a bottom, that I can't say at this stage here. What my inclination is that it's going to be a fairly decent bottom that's going to be continue on with this choppy market that we're in. And, you know, nothing to prove that point than taking a look at the New York Stock Exchange to see how little we've actually sold off from a price standpoint. You know, it is not, we didn't, although I didn't, let's go take a look at it. I don't even think we're anywhere near the 0.382 retracement, but I may be out of line there with regard to that comment. But let's go. I guess it depends on where you're going to take your retracement from, right? But realistically, I think we got to take it back from that March reading. So if we go from the March reading out here, March 11 to the high out here, we're right at the 0.382 retracement out here. That's all the price damage that's been done inside of the New York Stock Exchange. The number would be 11,023.62. Right now we're trading at, what, 11,034. We have seen a piercing. So this is hardly a market that has cracked here, and that's inside the New York Stock Exchange. So we've got the oscillator readings to be paying attention to inside of it. And we've got that euro. Now let's go back to the currency pairs and see what are going on out here. If we take a look at the Euro-Japanese yen, I mean, this thing is just simply strong. So it is now clearly breaking above its most recent swing point, which was May Day, May 1st out there, 135.28. It is above a 0.382 retracement level. That says that this currency pair could easily be headed up into the 140-ish level, 140.73. You see, in order for these markets to truly not just trend lower, but to really get momentum moving to the upside, you don't want a headwind like this. You want the Euro-Japanese yen currency pair headed in the same direction that price is. So if this currency pair were breaking out to the downside, my opinion is it would be just an entirely different story out there. That is not the case. Now, this currency pair may not make it up to the 140 level because we may see that the euro itself decides to stall out. And as we take a look at the euro, this is going to give us a reading here relatively quick. Maybe we're pretty darn close to it. So here's another piece of information. Now, we're taking a look at the euro versus the U.S. dollar as we speak right now. And as I pull this back, you can see how good, from the top side of the line out here, how good this has acted as an area of resistance. This is the descending price channel for the euro. It really began back right around the middle of July in 2014. So nearly a year. Right, so less than, we're in May, so it's been, what, 10 months out here. So since the middle of July, the top of that line basically has acted as resistance, right? We're seeing the euro as we speak right now. Let's go ahead and explode this up on my screen. We're seeing the euro pop and move up to the top of that area. If the euro is doing anything more than some type of counter trend move, and it could be, you and I won't know until we see how it behaves up at this level here. Now, by getting up, and we're really close, I mean, you know, today the actual, if we're going to hit it like, you know, dead ball accurate, which is not the case, would be right around 114.06. The actual high so far has been 113.67. Now, if it does take that area out, we see it close above it. I mean, today so far is a fairly wide-ranging bar. It could get wider for sure. But if it does take that area out with a wider-ranging bar out here, then you could have a real breakout. You could have a real breakout. And you might say, well, where would that take you to? That's a great question. What I would do is I'd take just simply a retracement off of this high from December in 2014 and see that we're above the 0.382 retracement level, and that would say to both you and I that the euro versus the U.S. dollar index would want to trade into the 117 area out there. How, why, I can't tell you. But right now, that's not what we have to contend with. What it has to contend with is that it's moving in towards the top of its descending price channel out there. And then the question is, what happens if this area acts as resistance from a deflection standpoint? Does it just start to move sideways as it works off a bit of an overbought condition, or does it start to retrace from there? That would then have an impact on, or would have an impact on, the euro Japanese yen out here. So these are the areas that, in my opinion, we need to pay attention. Now, with regard to gold, so you've got it at 113, and gold is at what's the price of gold right now? It's at 1,200. The price of gold is at 1190, so at about 1,200. So if I price this in euros, we're below the 1,000 euros, aren't we? For an ounce of well, that's pricing. That's not how the math works on here. Somebody would have to look that up for me. My contention is that maybe gold doesn't really break out to the upside. It either breaks out or breaks down. It breaks out to the upside if gold priced in euros gets back to about the 1,000 level, and then decides to take off topside out there, because I think everybody's kind of focused on gold priced in U.S. dollars. I don't want to be sounding like Gartman or what have you. That's not what I'm doing for sure. But I do believe, because there's been a thumb that has been just hammered on this closing price of gold out here, that's kept it within about a 20-point trading range for longer than you care to shake a stick at out here. So in any event, those are the things that we're looking at inside the markets that are going to really help us navigate. And we're not going to get too emotional. Not that emotion doesn't factor into these markets, because it absolutely factors into every decision that we make out here. It's why it's so good just simply to have a cool head, step back, take a look at the charts, and see what it's actually communicating to us. And that's what I try to do for you each and every day. Now, I'm going to do that for folks that are going to attend the workshop that I am doing, The Psychology of Trading, but it's really much, much more than that. And that's going to be held on Thursday evening. It's a 2-week workshop, 45 minutes each workshop. So this Thursday, 6:30 to 7:15 p.m. You can easily gain access to it. There's 3 ways to do it. One, if you've never been a subscriber, just come on over to the homepage at TFNN.com. You can sign up for my newsletter service. So that's a real easy way to do it. You got a 30-day unconditional money-back guarantee. So that's easy entry into it. That's the no-brainer. A little bit of thought is that you just simply go ahead and you sign up as a subscriber. But if you're looking for the middle road, you can just simply sign up for the workshop. $97 get you in to the workshop. If you're not available, that's not a problem. It's going to be archived on your members page. I'm going to teach you a set of tools that you're going to be able to use for trading. I'm going to teach you a set of tools that you're going to be able to use for every other area in your life, whether it's your health, whether it's your wealth, when you take a look at trading and investing, or whether it's your relationships out there. And it is a set of tools that I have been, quite frankly, that I have invested 25 years worth of time, but really seriously during the last 6 to 6.5 years out here. So I'll be sharing all those strategies with you. So I hope to see you there. Again, all the details on the homepage of TFNN.com. Now let's go take a look at what have we not really looked at here in the markets. What have I not truly looked at? Gold, I'll just simply go over to gold for you. Take a look at that. Here's the gold chart. Been traveling with inside. Really 2 kind of patterns out here. You've got the one where you're in the descending price channel. But I say the other pattern is just simply this congestion out here. This simple congestion. We haven't seen that inside of a gold for a while. It has meaning. And I wish I could really tell you what that is. I'm searching for that meaning specifically, and I'm doing that by going back to, I remember when gold broke out, and I mentioned something about gold priced in euros, and sure enough, once we saw it take out the 1,000 or 1,050 level in euros, we saw it actually take off topside out here. So so gold's kind of a flip of the coin at this stage. And maybe you have a reason why you believe that it's going to go higher, or a reason that it's going to go lower. If so, give me a call. Let's share that. Let's go ahead and take a look at that. But I can't figure that one out right now. VIX index, that's certainly something for you and I to be paying attention to today. It's trading at 1480. The 50-day exponential moving average is 1420. And the odd chance that the market made a short-term bottom this morning out here. And you see the VIX index, and you'll know that if the VIX index closes below 1421 today. The reason why I say that is because if it does do that, what the signal is going to be to you is that 50-day exponential moving average line has held as resistance as it has, with the exception of 8 trading sessions since the early February timeframe. That's why, since early February, what we have in essence seen is a market move sideways to higher. That's what a market does when the VIX trades below the 50-day exponential moving average. Here's that date specifically inside of February. If you just come back to, let's say, February 9th, here's where that swing point is. And so the real key level to be watching today is going to be the 1421 level. And look, I'm not, if you're bearish like I am, okay, I took a bearish position inside the market yesterday. But that doesn't mean that because that's a position and that's going to influence. I did it for a reason, as I've described to newsletter subscribers and what it is that we're looking for. But the forecast ahead, the outlook, if we look out the windows, and if we look out the windows and take a look at my windows, that'd be the stock charts out here. The forecast is actually a choppy movement continued. It's not a movement that this market is going to zoom to the downside out there. So I may be in a small minority. That's okay. I don't mind that group out there. I just lay out the facts to you the way that I see them, and you get to go ahead and digest them and say, it's all hubbubaloo, whatever hubbubaloo might be out there. In any event, let's get back to the markets out here. We can see that huge sell-off has, faded. So this is a market for both bulls and bears out there. And here's the deal, folks. You really need to expect this to continue for at least another week and a half out here. And if that's going to frustrate you, then just step off to the side. Just step off to the side for at least another week and a half inside of the markets, and you'll be doing just fine out there. Right now, we got the Dow. It's down 22. The S&P is basically flat. Russell 2000 looks like it's rejected the top of that consolidation box, that island reversal pattern out there. These are things that we pay attention to. Strong headwinds out there. The euro, Japanese yen. How do you really compete against a currency pair like that? We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. S&P flat, Russell's up, Dow's off 23 points, NASDAQ Composite down 4. If we take a look at Priceline, PCLN is a ticker symbol. It's up $13, up 1%. It's got some fairly decent volume inside of the equity this morning. Now, what Priceline did, Priceline had a nice breakout out here on February 19th, broke out with 2.6 million shares, and price came back to fill the gap. Now, in this case here, when we take a look at that, what's fill the gap mean? Fill the gap means all it did was it came back to the area where it broke out from. 1129.98 was the number. Price didn't get down exactly that level. It got down to 1130.86, and it was doing it with light volume. Now, what the equity is trying to do, it's trying to get above its swing point of 1264 even Steven. Now, that 1264, that'd be one of our Basel round number highs out there. And how about that? So take a look at that Basel round number high, gets to 1264 even Steven, then pulls all the way back to the breakout area. You got to love that. Now what it's doing, though, it's taking on that 1264. That had volume of 935,000 shares out there. A few trading sessions ago, only 571,000 shares as it tried to break above it. Yesterday in the market that was pulling back with 732,000 shares. It's already done 316,000 shares so far in an hour and 20 minutes of trading out here. And then it may have the volume today to actually close above 1264 and do it with volume. If it does that, then you have a confirmed A to B equals CD to the upside inside of Priceline, taking you to 1404. Maybe even potentially 1478. So where does that take us on a weekly chart? 1404, 1478 inside of Priceline. Hey, that takes you all the way back beyond the actual all-time highs in Priceline, and that is, give me a moment here, that is the price level of its swing from back in March, which is out at 1378. So at this stage of the game, looks like Priceline headed all the way back to those highs out there from March of 2014. What else? And I think I've thoroughly covered, whoops, I didn't mean to do that, thoroughly covered the market, so I don't want to bore you with that roundup. I've given you the numbers, for us to pay attention to. We won't really know till the end of the day. What can I look at here that I haven't? We looked at gold, silver, the currencies, light sweet crude. Let's go take a look at light sweet crude. We haven't looked at black gold, Texas tea. That's up $1.62. Let's put the daily chart back up on our screen. We're going to see a really nice rising price channel. It's very narrow, but nonetheless, it's still a rising price channel, and it's still a nice one out here. So it looks like light sweet crude has a little bit further to go to get to the top of that channel line. That could be around 63.40, somewhere in that area, maybe $64. And then once it gets up there, pretty good chance that what we see is we see light sweet crude pull back to the bottom of the channel, as it has done really ever since it began forming that channel back in March 18th. But nice little rise, just trying to do it quietly in the marketplace out here. Hey, what happened to all those folks when light sweet crude was moving lower and they were talking about the correlation as to why the markets ought to be moving lower and that the markets were going to crack? And how come it is that you and I aren't hearing those people with now light sweet crude coming off the bottom talking about why the markets ought to be moving higher with light sweet crude moving higher? Something to think about. Well, folks, it is Wonderful Wednesday. Come on over to the homepage at TFNN.com. Sign up for either Mastering Probability. Sign up for the Psychology of Trading workshop that's going to be held beginning this coming Thursday, 6:30 to 7:15, and then the following Thursday, so May 7th and May 14th out there. What's today? Today is May 6th. It's tomorrow night. It's tomorrow night. Did I say 2 nights? Yeah, it's tomorrow night. So it's tomorrow, folks. Hey, stay tuned. Our man Basil Chapman, he'll be up next. Have a wonderful Wednesday. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.